Hello everyone, welcome to Insurance Business TV and the Q3 edition of our Construction Insurance Power Panel. We'll be delving into cat losses, project budgets, mass timber and more in today's edition. But first of all, let's meet our panelists. They are Chris McLean, Managing Director, National Leader Construction and Infrastructure at Aon, and Colin Wight, Director, Senior Client Advocate Construction at Willis. So welcome everyone, and let's start with those cat losses I mentioned, with insured losses in Canada hitting a record $8.5 billion in 2024, driven largely, of course, by flooding, wildfires and extreme weather. How are construction insurers and brokers adapting to the financial pressures and indeed reshaping their underwriting strategies as well? Any thoughts on this one, Chris?
And Paul, thank you very much. It's a great question. The losses, that sounds huge. That's a huge number. I think that despite the losses, though, we are in a period of growth. The market wants to grow. Insurers want to continue to write premium, and the economy itself, though, we're in a certain situation where there's not a lot of private work. So we have insurers wanting to grow. There's not a lot of work. And it's actually driving more competition. And so despite the losses, I would say there's been a softening. That doesn't mean that there's a lack of underwriting discipline. I would say that still exists, but it's incumbent on brokers to unlock that capacity by sort of meeting the standard and hitting the bar, so to speak, for underwriting information to articulate the risk, so that insurers have confidence that they can put up an appropriate line of capacity for a certain risk, so that they feel comfortable and will not have those, they won't participate in those large losses that have happened. I think that it's just an interesting time, and I'd love to see private work ramp up, but perhaps the lack of the private work is driving some of this this softening and maybe more commercial attitude from insurers.
Yeah, and I think the other thing that's important to remember as well, Colin, is this isn't just a one-off bad year, is it? It's becoming something of a trend.
Absolutely. Insurers are recognizing that weather-driven severe events driving losses is no longer an exception. It's becoming a pattern that they now have to model for and account for in their underwriting. We saw following the Fort McMurray fires back in 2016 that insurers have recognized that exposure, and they've been developing and investing in their modeling to identify the risk and better underwrite it. When it comes to, and we're seeing that trickle down into their underwriting approach, identifying projects that are exposed and asking the questions of project owners and developers of how are they mitigating those risks with fire breaks, et cetera. When it comes to the convective storm events that we've seen in recent years, whether that be in southern Alberta or out in Ontario and Quebec, it's a little bit more difficult for insurers to model that. So they're working on that. And in the meantime, as Chris mentioned, the market is softening. So there are commercial factors at play. So while there have been insurers that have been trying to apply higher water deductibles to projects for convective storm, market forces have allowed us as brokers and insurance purchasers to find options that don't have such deductibles. So there is this process in place of underwriters trying to better underwrite, model it, and trying to implement terms and conditions, but also there's the competing market forces of the insurance industry right now in Canada, which is to the favor of the insurance purchaser for the time being.
Of course, we're talking about cat losses changing the environment. I'm going to sound really doom and gloom now, but of course, we've got inflation, material and labor shortages, extended deadlines as well, are stretching project budgets and duration, Colin. So how should brokers ensure that those course of construction policies account for those changes, including, of course, properly scaled limits, sub-limits, term extensions?
Absolutely. The economic forces and other factors that are influencing projects at this time really need to be carefully contemplated by brokers and the clients to determine what the replacement build costs are, so that we can set project limits appropriately, especially in the mid-market space where project limits are usually reflective of the insurable value. As brokers, we have to make sure that those limits don't just reflect the price to build a project, but to rebuild it. Materials aren't getting cheaper. So we got to make sure those limits account for potential increases in the event there is a loss. Now, there's things we can do as brokers to make sure the terms and conditions of the policy are negotiated in a way to help provide additional protection in such cases. We can negotiate in escalation clauses. And as we're seeing, due to labor costs and other factors, that projects don't seem to be getting completed within their initially contemplated schedules. So there's a flexibility now in the insurance market to pre-negotiate automatic extension provisions, which further provide protection and certainty for our clients.
Yeah, I mean, I described it as a little bit of a gloomy picture, Chris, but is there anything perhaps to take advantage of with this timing?
Like everything that Colin said is absolutely true. I think that we are in a period of commerciality, though, right? So there is this doom and gloom. We're concerned about labor. We're concerned about the cost of materials, volatility, but at the same time, it's a period of commerciality in the insurance industry where there's, as we kind of talked about earlier, there is a desire to grow. So I think brokers have a unique opportunity to use all their tools, but also use their time. If they use their time appropriately, they're able to and kind of think ahead at the risks and do all the things that Colin sort of has detailed. It's an opportunity for consideration. Frankly, the clients will get what they need. They'll have that built-in protection so that there will be an extension if they need it. There will be sufficient limit if they need it. And insurers will get the premium that they need to feel comfortable that they're taking a risk with their eyes wide open. I think when we look backwards at the last 10 or 15 years, and we think about the different cycles we've been in, it's because we've had issues, I guess, have sprung up because underwriters have perhaps thought something was going to look a certain way, and then it didn't end up looking that way as far as how losses trended, or certainly escalation of the values of losses. I think that's been something. And what I would kind of, not to bring up how maybe difficult the hard market was, but the hard market allowed us to have a bit more discipline around looking ahead, thinking about what's needed, and planning for it. So I think going back to what Colin said, all that's really important, being thoughtful about what you need versus just doing a deal, just doing a transaction, just looking at what the values are on the application and kind of proceeding in that manner. If you put a lot of thought into these things, whether it's labor strategy, material procurement, we're talking a little bit of mass timber today. I think being able to articulate how you're going to replace, in the event of a loss, the mass timber you need to rebuild a structure, that's going to be the differentiator between getting an insurer to give you the best terms and maybe not getting terms at all. So it's an interesting time, but like you said, sure, there's some doom and gloom, but there's a lot of opportunity as well.
Yeah, and I think you've just done my next transition for me, Chris, because let's talk about mass timber. Canada is, of course, seeing growing interest in that area, yet insurers seem to be remaining cautious due to limited loss data, elevated premiums. So Chris, how are industry initiatives like the Mass Timber Insurance Action Plan, how are they working to bridge these gaps? Indeed, what should brokers know as well? And also tell us about where the exposures are here and how they can be addressed.
The Mass Timber Action Plan is important. What it's driving, in my opinion, is it's driving a desire to really invest in the testing that will provide confidence to all stakeholders, but insurers in particular, around things like repairability strategies. I think that's probably one of the most important, critical things that insurers are considering when they think about mass timber, and clients should be thinking about that too. And then it carries down on into the best practices, whether it's moisture handbook or water intrusion plans. I think it's a new. Every project's nuanced. Every project's a little bit different. I think that we need to take that tact and really treat mass timber projects as they are, right? Which is a a highly kind of specialized, different building that has many positive attributes, but also has some risks, and so we need to address those risks. The good news is that it seems to be, not just sort of single construction companies or developers or suppliers who are kind of leading the way. There really truly is a community around this in North America and in fact the world, and that's pretty exciting. I think that Aon's been a big part of this. I'm sure Colin will speak to what they've been up to as well, but ultimately all this work that's happening together, with these action plans, with these associations, will drive a better, I think, go forward, life cycle for mass timber projects.
And it's interesting, isn't it, as well, Colin, because we're sort of talking about it almost like it's a new concept, but the reality is it's been around for quite a while.
That's right. Mass timber projects have been around in Canada for over 15 years. I believe there's close to 700 mass timber projects that are either been completed or under construction in Canada. But from an insurance perspective, we've been a little delayed in gathering that understanding, and that I needed to properly understand the risks. So that's where cross-industry collaboration is important to fill in those knowledge gaps that have prevented the insurance market from providing competitive terms for mass timber or differentiating the risk from other types of projects. So that's where the insurance action plan is a great example of cross-industry collaboration, of having the construction industry, the manufacturing industry, and the insurance industry working together to try to collaborate and coordinate their efforts to track, gather, and share information on mass timber. And that will go a long ways in the insurance industry to better understand the risk and underwrite it. And another item or a great example of collaboration was the fire demonstration tests that were undertaken a couple of years ago in Canada, where a real scale fire scenarios were undertaken and observed by multiple industry partners, which was a great example firsthand of the fire resistive capability of this technology. So with more information, more data, that will translate to hopefully for insurers to underwrite the risk in a more competitive manner to the benefit of insurance purchasers.
Of course, let's talk a little bit as well about Canada's recent green building strategy and retrofit incentives, which of course have been ramping up. There have been calls for deep decarbonisation of existing buildings. So, Colin, what proactive role should brokers play in terms of helping clients retrofit or indeed build sustainably while ensuring adequate insurance and I guess long-term resilience as well?
Yeah, there's definitely not only government support, but industry support to and motivation to retrofit existing buildings to reduce emissions, as well as implement low carbon technologies in new construction to achieve these sustainability goals we all share. But the key with that and with these meeting these objectives is implementing new technologies, new materials, or perceived new materials, new technologies. So as an insurance broker, it's key for us to work with our clients to understand what materials they're using, what technologies they're looking to incorporate into their projects, so that we can properly and effectively communicate that to insurers so they can understand and gain comfort with these technologies and materials. Because a struggle with insurance companies is recognizing these technologies and not viewing them as prototypical. So that's where it's important for early engagement, very open, transparent conversations with all stakeholders, so that there's greater comfort around these great, exciting projects that are helping us achieve these low carbon net emission targets.
And I guess as well, it's important, Chris, that we're sharing best practices here.
Yeah, no, absolutely. It's interesting just reflecting on sort of what Colin just spoke about, what we've been talking about, especially around mass timber. I think that with the decarbonization, there's some similarities. So sharing best practices and especially around claims and mitigation strategies, I think that's good. That's good for everyone. I also think it's really important to connect the investment side around carbon resiliency that the insurers all have with their underwriting appetites. I think that's important. Over the past few years, with different environmental concerns, you've seen insurers take capital and capacity out of the market that would have otherwise covered pipeline projects or mining projects. And I think there is capacity still, even in this market where it is soft and there's a lot of capacity being deployed towards lots of different projects and massive projects, $20 billion projects. You're seeing just incredible spending across the world and in North America in particular. I do think there still is that capacity that can be unlocked if we connect insurers to the thought process of you are desiring to invest in climate resiliency and this decarbonization, whether it's replacing cladding on buildings or different energy supply or energy plans around building grids. These are all kind of connected. So I think showing the connection is really important. And then, frankly, like we have to do our job as brokers too, right? We have to appropriately do the risk control, risk assessments, and make sure that we're articulating the risks to the insurers, to the underwriters, to our clients, so that we're all on the same page, right? I think, like I said, kind of at the very beginning of this question, I do believe that there is a lot of similarities, and I think it is something that we're better working in a collaborative nature, in the industry, not just brokers, but brokers, insurers, insureds, clients, like working together, because that's the best way forward, I think.
Yeah, great message to end on. Indeed, excellent thoughts throughout. Another fantastic panel. A huge thanks to you both. Thanks as well, of course, to you for watching, and we'll see you next time right here on Insurance Business TV.